Good morning, traders. Happy Monday to you all. It is 8:03 a.m. Chicago time on Monday, the 29th of January, 2024. Thanks for joining me today. This is episode number 2612. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have this morning? Lots of news flow overnight. Overall, unchanged markets. Really, the S&P is opening right around settlement. Settlement in the S&P is 49.16 and a quarter. We're down 0.75 points, 3 ticks. The NASDAQ is only up 15 points, which is less than one rotation, as you can see on the table on the right here, which we've updated. You could see that the NASDAQ upticked in terms of rotational statistics. The Russell, which has had big up days versus settlement, still stays below 2,000. It just cannot stay above 2,000. And the Dow's hovering around 38,200. Which it's been for several days now. So overall, not much to price in, despite the fact that we did get PCE inflation on Friday. There was mixed trading based on that. We ended up rallying and selling off. We'll go over that in a minute. The biggest news is 3 U.S. troops were killed at the border between Jordan and Syria at a U.S.-held base there. It was a drone attack that killed 3 troops and injured a lot of others. I think the last count was like 34 others. And this attack was supposedly done by, I don't believe anything in the news. So intelligence, whatever that means, says that this was done by Iran-backed militias. And what has happened since then is that the U.S. has promised to take action against those militias and potentially against Iran. What does that mean for us? It means crude is likely to pop higher, and it did. It opened about 30 cents higher at 5 o'clock Central, 6 Eastern yesterday, and now it's trading 42 cents lower. So it's had a 70-cent swing, or 1%, from high to low on that news. Crude settling in at 77.50 in the 77.50 area. The other piece was the White House met with the Chinese foreign minister. A lot was discussed, and they're looking to kind of iron out some of the creases there. And also to pave the way for a call between Xi and President Biden. We'll see what that leads to. It is an election year. The campaign is starting to heat up, and there's a lot that's going to be done that will impact how the market trades. This happened at the 2016 election, the 2020 election. It happened during Brexit. Politicians like to use our money to make a point, and the fact that the war is escalating, presidents who are presiding over a new war tend to win, and that fact is not forgotten by whoever's running President Biden's campaign. So expect a lot of news over the next few days, and expect reactions from the energy and the dollar, all dollar denominated products, the metals, and so on and so forth, as people try to figure out how much risk they have on the table. Today, as far as the calendar, not much to talk about here. Several comments from the ECB. The ECB is paving the way, or starting to talk about the path to easing, which the market welcomes. We do have the Dallas Fed manufacturing at 10:30. We have a 3 and a 6 month bill at 11:30. The prior for those settled at 5.225% for the 3-month and 5.02% for the 6-month. Then this evening we get the unemployment out of Japan. We're expecting 2.5%, matching prior. Looking at the S&P, and again, looking at these stats are really important. These are the most popular futures products traded out there. Next comes ZN and so on and so forth. But these are the rotations, the harmonic rotations for those products. Will give you an idea of how wide a stop has to be statistically or quantitatively speaking so as not to be in the noise. In other words, anything inside of 4.75 or 5 points is considered in the noise for the S&P, the NASDAQ, 21.5 points, and so on and so forth. The NASDAQ range has increased by 5 points over the last 252 sessions. The numbers being reported here are the first standard deviation, or what we call normal, or 68.2% of the on the upper limit of the histogram. Again, this is just quantitative data. Crude has dropped 2.3 to 2.2 in terms of daily, the edge of what is considered normal daily range. It has dropped in terms of rotations as well. The S&P is in a multi-distribution profile. Currently, the volume is quite light at 136. The inventory is nothing to speak of, and the range is okay. 20 points is right in line with what you see here statistically is the mode or the point of control of the overnight range for this product. Overnight being described as from the time the market opens in the prior session, which is 5 o'clock Central, 6 Eastern, until 8:30 Central AM, 9:30 Eastern, when the stock market opens, which is the RTH session. We look at what is considered the normal range, and the normal range can be up to 36, and the most common range is 20 points, and we're right at it. Point of control remains at 49.16. I think the prior was like 49.14 or something. Yeah, the prior was 49.14.75. So overall, there's just no movement. It's been 3 days, and it's all just kind of sitting sideways. Here's what was expected that we talked about on Friday. On Friday, I was looking for that 27 to be taken out, the test of the 27 to be done. We did take it out overnight. We went to 28.75. 27 is the point of control of the most recent high. And the expectation is bullish. I would expect it to push through to 27 and start to fizzle out in the 35 to 40 range. This is what this scenario is. And then the secondary scenario is we do push towards the 27, get an impulse down, and in that situation, we're looking for it to push down into 4,900, 49.04.05 being an important kind of support area right in here. So we're looking for it to push down towards that 4,900 area. I did remind you on Friday morning that the Delta is saying that despite the price action, there's really not much aggression, and it is likely to be choppy in the session. Let's take a look at what actually happened. Here's the ES on Friday. There it is. We open up, we push up, down, we extend below the open. The open is right here. The open at 49.18 and a quarter. We trade both sides of the open, and we finally launch off. We take out the 27, check. We push through the 30, and we start to move towards that 34, 35 area. You see it went to 34 and a quarter here. The expectation, since it did so early, and we have range extension higher. By the way, look at how it broke that IB. It broke the IB, which is a very valid IB, right? Very well constructed IB. breaks the IB, and it's just hard to see unless you're looking at a very short-term chart that there's always this, not always, I take that back. That is untrue. There's nothing definite about trading ever, but there's quite often this quick bloop test of the IB, and you could see it right there, right? And then it runs off. Now, as soon as it takes out the mid or the VWAP, we're off of that. And what we end up with here is scenario 2. Scenario 1 was expecting an impulse higher. There it is. Pretty big impulse right there, 12 points or whatever. And then we had an impulse lower, pretty big impulse as well, down here. What was that impulse? 10 plus. And then from there, we ended up pushing to 49.08, 07, something like that. And then sideways into the close, we ended up settling at 49.16 and a quarter. That finishes off Friday. And then we come in today with a gap down. Crude gapped up, equities gapped down. Flight to safety because of the events in the Middle East. We pushed lower to 49.01, so we never got to 4,900 in the day session, but we pushed to 49.0175 in the overnight session, consolidate, and then we're basically skating on top of VWAP, okay? So what do we have here? We have a multi-distribution profile, right? So we have this multi-distribution profile. We are in an active price discovery environment. We've pushed right back to, we gapped down, we pushed right back to settlement. We're holding settlement. Settlement is also the overnight point of control. And so right there, it's telling us that we have a market that is completely balanced at the moment. Despite the multi-distribution profile, we have gone below Friday's low and we've come back in and we're holding sideways. So we almost, it looked like we might break the one-time framing in this area, which is still up on the daily, but we came back into the range over here. You can see we tested right there, pulled back, pushed through. And we're holding right in the middle of the point of control on Friday, so we're in balance. We're in balance with Friday's point of control. The overnight point of control is right on top of Friday's point of control, which was right on top of prior settlement. And we have the VWAP closing in. This is a sausage-making factory this morning. If you want to get into that grinder and get ground up, be my guest. But that's what we've got. We've got sausage making today as the order of business, the main order of business. If you look at the delta, you got some divergence. Large selling, small holding up, very large sitting sideways. Net delta is basically zero. The net delta is flat. So again, another indication that really there isn't too much here to play with, okay? If we look at the TPO chart to see where we are, the reason I'm saying we're one-time framing up is because since we broke this high right here at 47.75, we've been one-time framing up. Higher low, higher low, higher low, higher low, higher low, higher low. Okay? We've been putting in higher lows, so that's one TF up, I forgot the F, up D on the daily. That's the current, trend condition. Until we break Friday's low, the expectation is we're likely to hold this range and retest this high we put in. We took out the most recent high, or the higher year so far, by 4 ticks and fell back off. And you can see that this profile is inside of this one, and this one barely broke through this one. So still we have the controlling day being this day here, last Wednesday, when we broke through and pushed through the 33. So really we are stalling out, and what we're doing is we are basically just consolidating. And that consolidation, and barring anything else being given to us, that consolidation is expected to break to the upside and start pushing 49.50, 5,000, all the way up to, what's the high? 5,032.75. I think 5,032.75 is the high a year last year. We are not walking away from that area at all. So, further analysis. Look at this. Look at these brackets. Just a mess. You have B period range extension below A period. And then so now we're thinking, okay, now we're looking to go to 4,900. That's the expectation. Go down to this gold bar right here. So this is a condition with B period the way it was. This is a condition to look for pullbacks to trade from that direction. Nope. We had C period extending B period, D period extending C period. Then you had E period extending D period. Then you had F period not extending at all. Just one tick test. And then we finally extend in G period, bringing us back on the side of selling. And then it's just down here. It's also a mess. So what this is saying, what Friday's action is saying is, it's just there's no more impetus. Look up the word. There's no more impetus for buyers to aggressively lift the offer and keep pushing and pushing and pushing. The best they could do is 4 ticks right up here. And there's really no aggression by the sellers, which tells us that these prices are not being seen as far too expensive by sellers, and therefore there's a profit to make in selling these prices short. And so what we have is a log jam, and this product is likely to stay in this situation until news comes out. What news, you might ask? Well, this week is chock full of it. This week we have GDP growth out of France, Germany, Eurozone, jolts coming out tomorrow. Jolts can move us. Wednesday, we have the FOMC decision. We have inflation out of Germany and France. And then we have the press conference. We have the Caixin manufacturing PMI on Wednesday from China at 8:45 p.m. And then on Thursday, we come in and we get the inflation rate out of the Eurozone, Bank of England's rate decision, and an ISM manufacturing in the U.S. on Thursday. ISM, very important. And then on Friday, we have unemployment, because it is the end of the month here this week. We're going to approach the end of the month. So we have a bunch of GDP data out of Europe. We have inflation data out of Europe. We have interest rate decision from the FOMC this week. Remember, the Fed is still in a blackout period right now. We have the Bank of England decision, ISM manufacturing, and unemployment, all compressed in the same week. So today, it is best to just keep your powder dry. Let me just grab a sip of tea here. Keep your powder dry for today. Today is the type of day where I would have to be grabbed by my neck and pulled into a trade for lack of interest. It has to really, really speak very clearly and loudly in order for me to engage with the market in any way, shape, or form. That today is mostly just waiting around and seeing how these profiles will resolve on top of each other. Okay? So that's the S&P. I don't have any scenarios for you that you wouldn't guess. It's the same. Open auction. Well, let's draw them so we can refer to them. Same thing. Open auction in range against the point of control, the overnight point of control. Responsive selling into this 49, 12, 11 area. Impulse up back to the settlement. Push the overnight high to get our overnight stat. Consolidate and squeeze higher and settle somewhere in here. That's scenario 1. Scenario 2, so we're looking for it to drop with an impulse higher. I'm going to draw an impulse arrow. Open auction, trying to be responsive, but it's right on top of balance. Refuted, come down, consolidate, and then start to give it up to the downside, potentially take us down to 4,900 down here. 4,900. So that's the secondary scenario. Again, I need to see those impulses pull back with follow through for me to be interested today. Okay, quick. By the way, look at the difference again between the S&P. The S&P sideways, one-time framing up, and the NASDAQ, which is established one-time framing down on Thursday and continued to one-time frame down on Friday, and appears to be wanting to continue to one-time frame down. By the way, Microsoft reports this week. Microsoft is gigantic right now. That's the most important report for this week that comes out tomorrow. The market cap for Microsoft is $3 trillion. But what's important is now Microsoft is a dominant force in software. So they have operating software as well as productivity software. In software development with their platform agnostic.net platform. They also have the most, a very strong, very large AI engine. They have hardware as well with their Surf and other products. They have all of it. And so the reason this report is really important tomorrow is you want to listen to the conference call and figure out where the weaknesses are and strengths are within Microsoft, because it's kind of a mall or a comprehensive tech company, and it'll start to give you ideas of where the weaknesses are across the entire tech sector. So we're expecting a pretty strong reaction to whatever their report is and whatever their guidance is, and that comes out tomorrow. So that's another big piece, in addition to all the others: GDP, inflation, Fed decision, ISM, and unemployment. This week is just packed with information. And the NASDAQ, of course, reacting the strongest, as it's got the biggest weighting of Microsoft, or the biggest holding in there. One of the biggest holdings in there is Microsoft, and it's heading south. So the NASDAQ may start the turnover and the push lower across the board. We'll see how that goes. Crude. So Crude has been in that multi-distribution profile. If you recall, it's outlined here. So Crude has moved vertically out of this multi-distribution profile, moved into this next profile up. Crude's key price up here is $79.95. 80 is the largest balance price, or the biggest target up above. 79.95, multiple tops. They're unable to push and hold through that price, and it's looking like it is doing some vertical price discovery towards that region. So Crude, that's where I'll be looking. Settlement on Friday is higher than where it is now. I'm expecting Crude to walk itself back into the $78 handle today, and then to just balance out pending more news. Good luck today, and I'll catch you tomorrow morning. Take care.